Hello and welcome to Mint. In today's edition of From the Newsroom, we will discuss about Reserve Bank of India's monetary policy, interim monetary policy today, where the central bank of the country kept its key policy rates unchanged, as well as its CRR unchanged. To discuss more about it, we have with us Dinesh Unnikrishnan, who will tell us why the RBI did what it did. Hi Dinesh, welcome to the show. So can you please tell me and our readers and our viewers, what does it mean? Why did RBI choose to pause rates?
Anup, there are absolutely no surprises in today's RBI's status quo. The central bank is clearly concerned about a sharp depreciation in the rupee. You know, theoretically, every 1% depreciation in rupee adds some 15 to 20 basis point, upward pressure on the inflation. So the RBI, the central bank has been inflation-centered policy maker last 3 years, and it's still refusing to lower its guard. So that is one aspect. Second is that whatever steps RBI has taken in the recent months, they have cut rates some 4 times since April last year, but the monetary policy transmission hasn't taken place in the banking system. Banks haven't cut rates. So maybe the Reserve Bank wants to wait a bit more, that is one aspect. Third is the food prices are still at elevated levels. So there is a possibility that this can push up the food inflation, and subsequently the overall inflation can go up. So which is a clear threat for RBI's inflation-centered policy, and it doesn't want to relax its stance until it sees, like it said in the policy today, durable, sustainable signs of inflation easing. That is one this thing. So it's clear that why it went for status quo.
So today RBI didn't cut the rate, and banks have also not passing on the rates, as you said, earlier policies, whatever they have done. So there is no chance whatsoever for banks cutting rates now, right?
It's absolutely out of question will banks respond to today's, if you remember in the annual monetary policy when RBI cut the repo rate 25 basis point, even then there were not too many banks who actually took cues and cut rates. Most of them were saying that unless a cut in CRR, the cash reserve ratio happens, and there is a significant easing in the liquidity pressure on banks, they won't pass on the rates. So even when they have actually reduce the lending rates, banks haven't passed. So it's completely, it's out of question this time will they act? They won't.
Okay. And so what's the outlook on rates like? I mean, after this, today they exercise not to, cut rates, and maybe Wednesday there is the Fed meeting where we will get to know more about what the US is planning. Yes. So going forward, what's your assessment that going forward, what will happen to the rates?
There are 3 aspects, Anup. As you rightly pointed out, what the Fed will do. Will there be signals of the exiting from their bond purchases? That is the most important factor in my view, which will be, which RBI will look for. On the domestic front, the rupee course, the course of rupee. If rupee goes back, if it appreciates and goes back to its May levels, and if it stabilizes at that level, there is a possibility that RBI will draw some comfort, to cut rates.
There is 53, 54 level.
Yeah, around about that. And the second very important fact is the monsoon, how it's going to pan out. The monsoon has started off well, and if it is normal, if it is good, then again that is another positive factor which will give some room for RBI to cut rates. So these are things which central bank.
So there is a possibility that RBI may cut rate going ahead.
There is a possibility provided these 3 aspects come in favor of the central bank. Right.
Thank you, Dinesh. So with that we conclude today's edition. For more, please log on to www.livemint.com. Thank you.